classical sampling handout. I think I mentioned to you guys to do the last couple of those, and so we'll go through and make sure everyone is okay with that, and hopefully you can start on the monetary unit sampling, which is it's a different type of sampling. It's actually in real practice, it's easier than classical sampling, but in doing it in the classroom, it's like you're doing a class, it's I think more difficult. It's kind of a wacky. It's a very effective but wacky kind of sampling. Okay, I think we're. Okay, so I think we're on. I don't have these numbered. Other independence issues. Mine is on page 7. It might be on page 6 on yours. Not sure. But other independence issues. Okay. Past due professional fees. Now, this is one of the ones that's kind of strange, and that is if the client is not paid for past services, the auditor has a financial interest in the client. I should say as a direct. The others are no longer independent. So if the client has not paid their fees, that's basically the same as loaning money to the client. You know, they owe you money. They haven't paid yet. It's the same as having an investment in the client. And if you think about it too, you have a vested interest in them doing well because you want to get your money. So if there's past due fees, now I'm not. There might be a discrepancy. I'm not like you know the normal things that happen, like you billed for 10 hours and you should have billed for 6 or something like that. I mean, like if they haven't paid their fees, for a significant amount, then the audit firm itself is no longer independent because now they have a direct interest in the client. It's as if they loan money directly to the client. So past due fees, those must be paid before. Now, if they pay the fees, then there's no problem. But, yeah. Okay, gifts. Okay, gifts, and this is gifts, giving them or giving them either way. And they should be clearly immaterial or appropriate in the circumstance. I know these are kind of vague terms. And just to be clear, that if you guys are taking your tax classes, they'll, they have dollar amounts that they'll have in there. They actually don't use dollar amounts, but clearly immaterial or appropriate in the circumstance. The reason for that one, or part of the reason for that, is you may have things like company picnics or whatever that maybe the auditors are invited to, or golf outings, something like that. And especially those golf outings, some of those things can cost thousands of dollars. They are material. They get, but in the circumstance, and when you have a company golf outing, they're appropriate. So there's kind of two things going on here. If it's just a plain old gift, here's a gift for the holidays or whatever, it should be clearly not material. I don't know, a bottle of wine or whatever it is. If it is, but also the other rule is if it's appropriate in the circumstance. In other words, they have a company golf outing and there's whatever 60 people there, and the auditors are invited in as one of the some of the people that are there. Auditors are actually in a lot of, well, it's a they're your client. It's like kind of having a lawyer or something like that. So auditors a lot of times do get invited to things like that, and that it's appropriate in the circumstance of the situation. Litigation. Okay. Possible problems. They really come in two kind of categories, and that is the auditor has a litigation problem with the client. Two, one client is suing the client of another client of the same auditor. So the litigation, these are probably the two most common ones that you'll run into. And that is that it could be that there's a lawsuit between the client and the auditor. So if we're auditing IBM sues us for whatever reason, that's a conflict of interest. And notice that we're looking through confidential information and so on and so forth, that you could definitely see how that could be a conflict of interest where we might have additional information on them or whatever, and that they would probably not have that on us, right? So, they don't come to the audit firm and look through our books and all that. So if there's litigation between the auditor and the client, that's pretty straightforward. It could be, though, conflict of interest between two of the clients of the same auditor. So let's say IBM is one of your clients and Microsoft is another one. Well, IBM and Microsoft are suing each other. There could be a problem there because, again, you're looking at confidential information. These are both your clients, and the conflict between those two may cause a problem of independence, and then you may have, throw it out whichever way you want to, whether it's Microsoft or IBM or whatever it is, that you could have a conflict of interest in. So litigation between two clients, even if the CPA firm is not involved in it, it's possible that is an independence issue. Okay, non-attest services, consulting. And you know what, I'm gonna get to these later. At the end of the handout, I got kind of a summary of this, so I think we'll wait on this. Okay. Reporting illegal acts. Do we ever talk about this? We talked about illegal acts, didn't we? No, I guess we did. Okay. Wait a minute, we did talk about illegal acts, and we talked about that. If you yeah. Let me go back here.
Yeah, we briefly touched on it relating to like expectations of the auditor, getting a response back in a reasonable amount of time from the client, reporting to the SEC within 24 hours, depending on the circumstances and if
Yeah.
material.
Yeah, it's the same thing. Yeah, reporting illegal acts if no action is taken.
That was in chapter 1 and 2 handout.
Yeah. Yeah, CPA, get a lawyer, which sounds like a real cop out, but you know. And Pcaob. Yeah, we talked about that. Okay, subpoenas. Generally, client information is confidential. Unlike a lawyer, oops. You know, that's that. And that it is, you know, for instance, the communication between a lawyer and a client is absolutely airtight. I mean, unless there's illegal acts between them, which means they're both in the crime, it's impossible to get, you know, so when you talk to your lawyer, nobody has the right to get that information. Now, some states, it's nearly that tight for CPA firms and their clients, but virtually all states will have that a subpoena can be served. Now, a subpoena is a court order for the information, and it has to be a subpoena. It can't be, you know, lawyers send letters all the time. We want information on blah, blah, blah. That's not a subpoena. A subpoena is they go to the court decides that, yeah, you have the right to this information, and a subpoena is issued. So it has to be a valid legal subpoena to get a response. But you are required to comply with those subpoenas. So if there's a subpoena, again, it has to be a valid subpoena. It cannot be a letter from, you know, of any other source. You have to go before a judge. And but only a valid. Oh, forgot the B. Only that, there's a better way to write that, I don't know, but so only a valid subpoena needs to be complied with. If it's anything less than that, it's just a lawyer letter, say a lawyer letter, or even from law enforcement, if it's not a subpoena. You know, if they get a subpoena, you know, if they want the information, they need to get a subpoena, or else you don't comply with it. It's confidential information. Now, the auditors own the work papers. So when you gather all your evidence, the auditors actually own that. It's theirs, but they can't just do anything they want with it. You know, they can't do an audit for IBM and then, you know, post the work papers all over the internet. Well, there are papers, we do what we want with them. It's not like that, because it's still confidential information. And there still is a fiduciary duty for you to keep their information confidential. So, you know, even though the auditors do own the work papers, they cannot simply share them with whomever they like. And the only people that can get shared with without a subpoena is when the work papers are being reviewed by somebody else. So someone else comes in, a third party comes in to review the work papers as a quality control thing. They're allowed to see the work papers, even though they're not on the audit. They're allowed to look at those, but it's more of a quality control thing, not a legal thing, or it's certainly not to be made public. Okay, so the only way it can be shared other than a subpoena is for a valid review of the auditor's work, usually by another auditor. Okay. Oh, we talked about this one. We already talked about that. Turn the case over to the SEC. They don't respond within 24 hours. And I think we did this one too. Do nothing. You know, parking an illegal handicapped parking space. I think we did this, didn't we? Oops. So if there's something that's clearly not material, you don't do anything with it. Oh, and I do actually want to make a mention about on the exam, something about them when something is presented. Well, this is more along the lines of the CPA exams I'm talking about. I mean, and when I give out questions, I generally, my frame of mind is like, these are CPA exam questions. If you catch somebody doing something illegal, okay, I think in the question I said that it was immaterial. And somebody said, you know, to expand to see if there's, you know, how pervasive it is, how big of a problem is this, you know, fraud or whatever it was. When you're given like a CPA question, if they say it's immaterial, take it at that. Now, in real life, you know, if you ran across a fraud, you go, well, okay, so, you know, if this clerk is doing this fraud, then, and, you know, they have 60 clerks in this place, how, you know, are they all doing it, or is this the only one, or what, you know, you would definitely expand it and, you know, try to see where it would lead to. However, you know, and see if it's material. However, if they tell you in the question itself that it's immaterial, just take it on that face value. And one of the things that they would always tell you is, answer the question you're presented with. In other words, don't change the question to, oh, this might be material. It doesn't say that it might, just to be aware of that. Now, in real life, yeah, you definitely do that. You definitely look and see, okay, we caught one person, doing this. Well, we'll look and see if it's material or not. But when you're given a question, whatever's in that question given as a fact, just assume that fact is, what you're supposed to be answering. I guess the bar exam isn't like that though. I guess the bar exam is all open-ended. They give you these little one sentence things, the taxi car rear-ended a school bus. And you're supposed to go into legal, the criminal, the civil penalties and all this other stuff, driver's license and all this kind of stuff. Cpa exam is a little more specific. Contingent fees. Are generally allowed, except for following. Now, let's talk about what a contingency fee is. The contingency fee is it's contingent on something else happening. So you'll get a fee if this happens, whatever it is. If you think about it, am I going to take an umbrella when I go to work today? I'm going to take an umbrella if it's raining, right? So the thing that's good, taking the umbrella is contingent on it being raining. If it's not raining, then I won't take the umbrella. If it is raining, I will. All right, so contingent means, that it happens if something else. So a contingent fee would be, so let's say you're given a project by your client and they say, look, we really want this done. Maybe it's a new advertising campaign or something like that. And actually CPA firms they will get into areas like that. There are some consulting areas that they get into marketing and those sort of things. And the client may say, look, we want to launch this thing on July 1st. So if you get it by July 1st, we'll give you an extra $50,000. That's contingent. It's contingent on you finishing the project by July 1st. Generally speaking, there's nothing wrong with those. So there's nothing wrong with contingent fees in general. There are 3 situations, and these apply to CPAs, that they are not allowed. Oops. First one is audits or other test functions. So audits or other test functions, you cannot take an audit on a contingency fee. So the client, you tell the client it's going to cost $90,000 to do this audit, and the client says, "Oh, that's okay. Tell you what, you give us a clean audit report, I'll give you $100,000." You can't take it. You can take the $90,000. There's no problem with that. That's not contingent. But you cannot do the extra $10,000 if they get a clean audit. So audits are no-nos for contingency fees. Now, you can always charge a flat fee, and that's what you'd be doing if you were taking an audit. What are we doing here? I'm gonna do something. Hold on a second. A flat fee or rate is always allowed. Okay, so it isn't that you can't charge a fee for an audit. You will charge a fee for an audit. You're not going to do audits for free. But it has to be either a flat rate, whatever it is per hour, or a flat rate in total for it. That's fine. It just cannot be a contingency fee. It can't be contingent on something else. Okay. The second one. Tax returns. So you cannot do a tax return for somebody and say, look, okay, I'll tell you, I'll do your taxes and you don't have to pay me, any fee, but I'll take 20% of your refund. Whatever your refund is, I'll take 20% of it. So make 100, if your refund's for $100, I'll take $20 or whatever. You can't do that as a CPA. If you're not a CPA, you can do it, and people do it all the time. But as a CPA, you cannot do a tax return for a contingency fee. Now, can you do tax returns and charge a fee? Yeah, as long as it's a flat fee, absolutely. But you can't have a contingency fee. Yeah, again, this is. Oops. This last one is a, oops. Compilation that leads to a loan, and I'll tell you what that is in a second. We've been talking about compilations. A compilation is simply taking the client's data and putting it into financial statements. So they give you all the data. You put in financial statements. You do not do any auditing stuff. You don't verify the information they give you. When does it come into play? It comes into play, for instance, so let's say someone has a photography studio. Good at taking pictures, but they want to know how much money they're making and, where they stand financially. And again, it's just not their background. While they know how to make money, they don't know, they want someone else to do the financial statements for them. So you can do the financial statements for them, and it's called a compilation. You simply compile their information into a form. In this case, most likely it can be financial statements. Okay, so there is no attesting to anything. You're not putting a stamp of approval on anything. It's simply taking whatever information they give you. If they give you garbage, it's garbage. Now, you cannot take a contingency fee for doing compilations if they're meant, if the contingency is to lead to a loan or investment, coming in for it. So someone says, can you do my compilation for me? And if you make my financial statements, and if you make them good enough, I can get a loan. So if I get a loan, I'll pay an extra $5,000 for the compilation. Well, you can't take that. There's obviously a conflict of your fiduciary duty to the public. So this is simply making financial statements. And again, a flat fee is always allowed. So, you say, well, no, I'll charge you whatever, $600 to do this. And as long as there is no contingency fee, that's fine. So contingency fees are, they're dependent on something else. They're dependent on an outcome. And they're generally okay, for most things they're okay, but these three are no-nos. So contingency fees are absolutely fine, except for audits or attestations, tax returns, and compilation, making financial statements that someone's going to rely upon for, say, financing or investors to come into their place. So those three are the exceptions, but contingency fees are fine for other things. If you're doing a consulting job and they want the consulting job done by this period of time or whatever, that's fine. It's only for those three things, and you can always charge a fee. It isn't that you can't charge a fee for this. You can and you will, or else you won't do it. But well, I guess you do pro bono, but you can always charge a flat fee. It's just that these three things you can't charge contingency fees for. Okay, acts discreditable. Felonies. Not filing your taxes. Oops. As they asking, we're telling. I know it sounds strange, but those are, they test those quite a bit. So felony is kind of obvious. Remember, we give credibility to the financial statements, and if we're out there committing felony crimes, it doesn't help. So you can lose your license for that, and that's often one of the things that they do lose their license for. Also, not filing your taxes. If you don't file your taxes, they can pull your license. And this is by the states, by the way. The AICPA will kick you out of the AICPA. But the states can pull your license for those things. And divulging questions from the CPA exam or asking for questions that are on the CPA exam. So when students take the CPA exam, I never ask them, hey, what was on the exam? I mean, they can tell you general information, but as far as disclosing the questions, the specific questions, it's a no-no. So yeah, those are three things that come up quite a bit. Well, they come quite a bit in the CPA exam. Referral fees for audits are not allowed. I should say for audits and attestations. So for audits and attestations, referral fees are not allowed. they are, for other services, they're allowed if they are disclosed to the client. So the client says, gee, I really need, I should get life insurance. Your life insurance. I mean, you happen to have an agreement with another life insurance person that for every person you send over there, that they'll give you $25, right? For referring somebody to this life insurance person. So you can say, well, yeah, I got this person I work with. I have to let you know though, I get a referral fee of $25 for sending you there. Okay, so as long as you tell it to the client, and it's not an audit or any other test function, it's fine. So as long as it is disclosed to them and it's not an audit or any other test function, where you're putting your stamp of approval on, it's fine. So referrals, audits, no, everything else, it is okay, but you have to tell the client that you have that fee. Is this the end of it? Oh, it's not. What am I doing here? Okay. CPA as a tax advisor. Okay, so CPA has a duty to the client and to the public as a whole. And as part of the designation of being a professional. So if a client gives you what is clearly questionable information for their tax return. Now notice the tax return is not, you're not putting your stamp of approval on the tax return. But if you're filling out a tax return for a client and what they're giving you is clearly erroneous or or suspect, maybe the better term for it. If they're giving you this information that is not, that is questionable, you have a duty not only to the client but also to the public. So you should not file questionable tax returns because you do have not only the duty to the client, but you also have a duty to the public. So, now generally speaking, you are not, when you fill out a tax return for somebody, you don't have to do an audit on that. They'll give you the information and you should be able to put it in the W-2s and W-4s and all the other tax documents and all that. But if they're giving you information that is either, significantly questionable, or if it is, obviously not right, then you have a duty not to do that. Not to create that report or file that return. So they have that level of, of professionalism is that, sorry, I got something, what that was, piece of plastic. You have a responsibility to the public that you don't file fraudulent tax returns. And again, if you think about it for CPA just in general, whenever you run into any question and you run into them on the CPA exam, a lot of times it will, maybe you didn't cover. If you just remember, the one rule is that the only thing that we lend to the financial statements is credibility. So you don't want to get mixed up in anything that would make that, that be not the case. Those things that are, if it doesn't add to the credibility, you don't want to do it. So, okay. Now, comparative of services. And there's two different groups here. We have the Pcaob and the Aicpa. So Pcaob, this is for, let me do this one first. So this is for non-issuers. In other words, private companies. This is for issuers. Okay. Pcaob. Their general overall rules are you can't do anything that you're going to be auditing in the future. So, generally speaking, they look at, nothing that you can't do anything for the client that might come up in an audit in the future. Now, the Aicpa is a little bit different because the Aicpa, remember, this for non-issuers, and you might do more for the clients because, your clients may not even have an accounting department. They may not even have any accountants there. So you kind of think about big and small. If they're a big company, that you can do this. You can say, okay, you can't do anything, or if they're smaller, a little bit more leeway is given. Okay. So bookkeeping. Sarbanes-Oxley. No. Aicpa? Yes. Now, they can't post the journal entries, but for regular run-of-the-mill journal entries, you can actually do those for your client. You can do them for your client and then do the audit. So you do the journal entries, they'll approve them and put them in the system. That's a management function, approving the journal entries. But there's no problem with you making the journal entry, making the, doing the bookkeeping, making the journal entries, and then they will put them into the system. And by the way, you're going to see a pattern arise here. Most of these are no, and most of these are going to be yes. Financial accounting system installation, no. Your CPA, yes. And again, PCAOB, they say, no, you're going to audit the you're going to audit the accounting system. It's going to be part of your audit, controls over the accounting system and all that. We can't have you putting in the system and then turning around and auditing the system. Aicpa, a little bit more generous. They say, oh yeah, you can't put in this, as long as it's an off-the-shelf, CPA accounting program. It's not when you made yourself, you can do it. Because when it made yourself, you can't. But if it's, I think you'd have to be crazy to make an accounting system yourself. They're so cheap now that you can get pretty powerful ones for really inexpensive. But the PCAOB says no. And by the way, it used to be when companies wanted a new accounting system, they would only let their auditors put it in. Whereas now it's a no-no. Appraisals or valuations? No. And for the most part here, it's going to be no, unless that there is clear criteria. And the reason being is that this You can't do an appraisals that don't have clearly defined criteria. If it's an appraisal of, say, stock, and the stock's publicly traded, that's fine. You just look, you just look up and see what the last selling price of it was. And, there's clear criteria. They can't be manipulated or anything else. In other words, there's not a lot of judgment involved. So generally speaking, though, you cannot make a management decision for either of these. Internal audit function, no. Non-issuers, yes. Management, human resource recommendations, generally no and no. That's a management function. Investment service recommendations, no. Yes, but only for general. Let me see if I can put that in here. What I mean by that is you're not actually picking the stock or whatever. You might tell them, look, put 20% in, I'm just making this up, but put 20% in tech stocks, and put 20% in energy stocks, and put 20% in. You can give them guidelines as far as allocations, but you can't actually pick out the stocks. You can't say, okay, you put Exxon in your portfolio or anything like that. But you can't tell them general allocation amounts to put in. Legal services not related to auditing. This is strange. Oops. I just really changed the color, but yes and yes. And the reason why I say it's strange is the rules are actually silent on it. There are no, there isn't any rules, any guidelines or anything on it. So by default, they're not telling you you can't do it. So by default, you can. There's nothing in the rules about legal services, not related on it. Tax planning for common tax issues, yes. And yes. Unusual or aggressive tax issues. No. And no. All right, you cannot be an advocate for the client, ever. You are supposed to be independent. And now your client might say, you give them a clean audit report, you give them an unmodified audit report, and you say, can you come to the bank with me and just talk to them, just tell them that, we're on the up and up, and that these financial statements are, okay. You can't do it. You cannot be an advocate for the client. If they're taking an unusual or aggressive tax stance, you can't take their side in it. If it's normal run of the mill stuff, cut and dry, okay, this is the 13% tariff and whatever, that's fine. If it's the same thing that you would get from any other tax advisor, run of the mill tax issues, that's fine. But if it's an aggressive or unusual tax issue, you cannot help the client with that, because you have to be their advocate. You can't be their advocate. and you know, they may think because of relationship that you will, but I mean, it's can't do it. Tax services for officers, no. And yes. And it used to be very common when they would do when the CPA firm would come in and do the audit for whatever company, and say IBM, that they would do the taxes for all the officers. You know, all the people higher ups would get their tax done for free by the CPA firm. Not really for free, it's included, you know, think about it, it's got to be included in the audit. But that was one of the, you know, the common, very common perks of it. And people used to kind of brag about that, you know, the auditors were doing, you know, they reached a high enough level in the company that the auditors are now doing their taxes. You can't do that anymore. So you can't do the taxes for officers in the company. You can still do it if they're not issuers, but if they're issuers, you can't do it anymore. There's a really weird case where two officers in one of the company I used to work at, actually, Navistar, that two of the officers got the CPA firm to do their taxes when they weren't supposed to with Pcaob. And instead of firing the auditors, they fired the two officers. So it's a, you know, it's a very serious thing, and it's yeah, it's a no-no. So okay, I think that takes us, that's the end, right? Yep. Okay. All right, so generally speaking, the AICPA is more lenient. Two things though to come away with it: you can't be an advocate for the client. You write these down. I already got this one down. I'll put it at the very top. And this goes for both of them. You can't be an advocate for the client, and you cannot make management decisions. Those are no-nos for whichever one you, for Pcaob or for AICPA. So you cannot be an advocate, you can't make managerial decisions, or else you're not independent. Okay, well, that took longer than I thought. What I'm going to do is I'm going to send out the multiple choice questions. I think they're in Blackboard already, but let me send out the CPA questions related to Chapter 3, and that'll give you guys opportunity to get some extra credit points. So let me do that. Okay, so you should get the multiple choice question. Let me see if I can start the poll. Hey. And so whatever you guys enter, you guys will get obviously get extra credit points based on it. Let me save this. Okay, so it'll look like that. And I'll say, let's go and take a break, and we'll say be back, and you can fill this out whenever you're. Let's say 7:15. That'll give you time to look over this. Okay. Go through these. Which the following family members is most likely to impair? Yep. Two. What's the following adjectives most closely associated with the United States other than other professional work? Okay, yeah. Independence. And that is kind of a strange one, in that, you know, you don't need to be independent if you're a lawyer or a doctor. You can work, you know, you can do legal work for family members. You can be a doctor, you can treat family members and all that. But with CPA firms, it's different. We have independence. That's kind of different than most professionals. So practitioner placed it as a trust and education fund for the CPA's minor child. Okay, that's a no-no. These are not material to the CPA, but were material to the child's personal net worth. Well, it's definitely against the rules. It's not indirect, it's direct. So it'd be a D. And again, any direct interest is a no-no. Even if it's one share. That's a dog barking. It's a dog. I'm dog sitting. So you're barking, that's not me. The AICPA allows for which of the following: performing bookkeeping. Yep. Uh-oh. 5 is split 3 ways. It's the first one. Now, this isn't the only thing that it is. But contingency fees. They're not allowed for attestations, audits, and those sort of things. They're also not allowed for taxes, and they're also not allowed for compilations. However, they're allowed for everything else. So it isn't that they're always prohibited. You can use them for anything else, but they are not allowed for those 3 things. Now, they're not allowed for attestations. That's absolutely true. It's not the only thing they're not allowed for, but it's certainly one of them. They are restricted because there's the 3 exceptions that they can't be used for. It's not an act discreditable. Well, you guys split 3 ways, I'll give you that one. Which of the following acts would a CPA most likely be a violation of the AICPA? Yep. We find circumstances where the current member be considered independent. And immaterial, indirect, yep, that's okay. Oh, trustee, that's a no-no. Maybe talk about that last time. I can't remember though. Yeah, it has to go with this. It can't be a member of upper management or director level. Trustee certainly is. So that would be a director. So yeah, that would be Jones and Company CPA has one office. Risk of filing is the least likely, okay, least likely to impair. Yep. This one we just talked about. If they owe it for 2 prior years, well, even for 1 year, it would be it'd be the same as being giving a loan to the client. So that would be a no-no. Nine is, yep. And yep, very good. Okay, well, let's close the poll. You guys get all the points.
Sorry, I missed the right answer for the number 4.
Give me 1 second. What's that? Spring. Oh, that's not the right one. Let me take a look here. Number 4 would be
C. Okay. Thank you.
yeah, they allow you to do bookkeeping services now. You can't. You can make the journal entries, but the management would have to enter them into the accounting system. They call it posting. I mean, if you guys if you're familiar with the accounting system, but they usually you make journal entries, and then a manager will usually post those entries. And you can do that. You can make the journal entries, basically run the mill journal entries, and as long as you're not making a management decisions on it, it's okay. So, for instance, you couldn't post the entries without the client's approval. It's a management duty. You can't make their source documents. You can't make invoices. You can't do sales orders and all that kind of stuff, because those are things you're going to be auditing. And you certainly can't authorize transactions. So,
Thank you.
yeah. Okay, well, very good. I will do that. And next thing we're going to do is, nope, not blank screen. Nope, not that either.
Each of those were worth 5 extra credit points each, right?
No, in total, you could add
Oh, okay.
plus 5 onto the exam. So the exam, the Chapter 3 exam, which I'll send out probably tomorrow. I might get it out tonight, but we'll try for tonight. But certainly by tomorrow, I'll put out the Chapter 3 exam. Let me put that on here. I'll try to get it out tonight. And it will be due I think the 20, I almost said the 29th of February. That would have been unusual. Not in leap year, but so March 1st. Okay, we'll go ahead and finish up the chapter of the classical sampling handout. Let me. Did you guys try problems 4 and 5 or no?
Yes.
Okay.
Yes.
All right.
Is Is the difference for 5E supposed to be insanely large?
They planned it that way, but let's take a look here. I don't know if I did 5E. Did not do 5. It should be insanely large. It should be it should be 300,000. So this should be 64.
Oh, I screwed up my math. I see what I did wrong.
Excuse me. 60.
Thanks.
Well, here, let's take a look at this one. See if you have any questions on this one. This is the
So we're doing number. Okay, I think I got confused. We were supposed to do 4 and 5.
yeah.
Okay.
Yeah.
Yeah. Okay. No, because you were just showing the number 5. I'm like, oh my God, I got the wrong numbers, but no.
Yeah. No. I didn't do number 5 yet, so I'll do that one.
Okay, that's okay. Thank you.
Yeah. So this is what you should get for the problem 4. I should make these a little more. My house has been an absolute zoo today for people coming in, with the dogs going. Okay. Okay, so for C, we should have the statement of 100,000 overstated. For D, 36,364. 33,636 for the overstatement. And for the difference one, it should be 60. I'm just going to copy these down and then I'll fill them in. Be quicker, save us all time.
Isn't D understated? Or no, it's sorry.
No, yeah, no, well, they can be, they can be different. I mean, that's not. Okay, so this one would be 64 times 100,000. So 6,400,000 be the projected for that. And 6 million. Oops. So you have a $400,000 understatement, right? But we're saying it should be 4,600,000. They only have 6 million, so this would be understated by that. Okay, ratio, this would be 64. 61, and that one I can not do in my head. Turn the calculator on. Okay, this is projected value is $6,295,000. Let's see, let me write it out. Uh, 082. And again, this one is probably, in my estimation, the one that you probably use the most, because it says that big things are off by, bigger errors will happen in bigger accounts and smaller errors in smaller accounts, which I think is kind of intuitive in a way. Or, you know, the way normally things are. It'd be unusual for a $10 account to be up by $10,000. But a $10 million account could be off by that. Okay, so the projected value is 295.2. And so that would be so ratio estimation would be that, oh wait, these are, I get this wrong. Yeah, it's understated. We're saying it should be 6,285,000. They're saying it's only 6 million. So we're saying, okay, it's off by 285,000. And the difference estimation $64 and $61. So it's, hey, it's 3, but it was plus 3. And that's by 100,000. And these are sales. What are they? Accounts receivable. And so we're saying, okay, that every single accounts receivable is going to be off by $3, so that this is really understated by 300,000. And again, this was the weird one because it does the projected. What am I doing here? Am I wrong?
It's
Oh, I know what I did here. This is, I
supposed to
copied.
divide.
It's a cut and paste error. Okay, so this should be, let's see here. So the projected misstatement is 300,000. And that's going to be an overstatement. Scratch that, understatement. Save time. And so this is kind of the weird one. Is that okay? Well, if it's understated by 300,000 and they have 6 million on the books, this has to be 6,300,000. Because they're saying that every single item in here is off by $3. So that this should be. $6,300,000. And I think we already went over this, right? Yeah, we went over the when do you use them? And again, if I would you hate to make an assumption, but for most things, you're gonna see, I think the ratio estimation one is the most likely. Unless you have something that's very similar, and if you break up the inventory or something into the case where there's similar values. I think it's probably the most logical one to use. Not that the other ones won't, will never be used, but and I don't think I've seen hardly, they may have seen a question or two on trying to pick out which method to use. I don't think they really, in the past, they haven't dwelled on that too much as far as pick out which one. They'll say, what would be the misstatement using the whatever method? That's usually the way they test on the Cpa exam. And they'll ask you what's the misstatement? Is it overstated or understated? So that's usually the kind of format you see that in, or at least that's what they've done in the past. I know what I want to ask you is, did we ever go over like the cost of the Cpa exam and all that kind of stuff? I don't know that.
I don't think so.
Are you guys interested in that or no? Like the schematics of the logistics of how you get there?
Yes.
Yeah, please.
Okay, you need something out then. And I'll put this in Blackboard later.
Will you be making the assignment submissions for the audit sampling in Chapter 3 handout available in Blackboard?
Yep.
Okay, thanks.
Yeah, and also the Chapter 3 exam, and they'll all be due on March 1st. Okay, let's see. Yeah, so these are the application procedures and kind of what you want to go through. Let me show you on my screen. That would be helpful. The current requirements are the bachelor's degree plus 45 hours to sit for the exam. They're doing away with that. They've bumped up the number of accounting classes you need. Now you guys are in the master's program, I believe, right? So it'll be they're a little more generous on the master's program for what they'll accept. But but that's going away. The bachelor's degree plus 45 hours is going away. So if you have a bachelor's degree in something other than accounting and you have the accounting hours, it's most likely that you're going to be okay to sit for it. But the exam's changing quite a bit in 2024. I don't know when you guys are planning on sitting on it. Right now, it's the way it's been for 20 years or whatever. But they're going to change it. Right now, there are 4 sections to it. 4 set sections. The new exam is going to have 3 set sections, and then you choose a 3rd section. But anyway, I don't think it's going to the application and all that. I don't think it's going to change too much. Okay. The domestic credential evaluation. So this is what probably most of you are looking at. If you do have credits from a foreign school, if you pay $50 more, they'll look at those, and I would encourage you to do that especially if there's a question about whether you're going to have enough credit hours or classes to sit for it, because it's $50 more, and that's it's way cheaper than taking a class, and it's way faster than taking classes. So anyway, these are the fees for it. So you're going to complete the application, and the application fee, you can apply for one or all 4 parts, and they give discounts for how much you're gonna. Yeah, I think it's did I get it down here. Yeah, and one part's $40, and the more you buy, the more sections you buy, the better deal you get. But so you pay your fees for the credentialing and the application fee. And once they clear you for the credentials and the application fee, then they'll say, okay, you can sit for the exam, and you can, whichever one of these you want to sit for, you can do them separately, or you can do them all in the same testing window. And so the total price of the exam itself is a little more than $1,000. You're also required to do this ethics exam, which is given by the AICPA. It's an all-inclusive course. It gives you the materials to study, and it gives you the exam. It's all included in that. And for the most part, people do not have a difficulty completing that. I think you need like a 90 or something like that, 90% on that, but virtually everybody passes that part. Okay, you can also go do a pre-evaluation application where you send in your stuff and do a pre-application fee of $50, just kind of see where you're at. Now, that $50 does not get applied to this up here. So if it comes back and says, yeah, we think that you're okay to sit, you still have to pay this fee and go through the complete credentialing process. And again, the $50 does not get applied to that. You have to pay the same. But again, it's $50, and you might be helpful to know where you're at before you get too. It's better to lose $50 than $200. We'll put it that way. Okay. So once you complete the examination, they will give you they'll say that you're allowed to take parts of the exam, and you have to schedule them. And this is the part that's kind of bad about it, is that when you schedule the exam, so the test site, date, time, and all that, they do it on a first come, first served basis, which sounds great, except that what people do is they all book up all these times. And so they do it, if you want to get a time, you have to really book pretty far ahead usually. And what happens too is oftentimes, people will then not take their scheduled slot. They'll give it up. So if you keep checking back, sometimes you can get it. So let's say you wanted to take the exam on March 12th. Okay, you go there, you can't get it on March 12th. As soon as you can get it, it's April 20, whatever. You can keep checking back, and there might be one open up on March 12th or whatever. So it is kind of a well, it seems like it would be convenient, I can schedule it for what I want. The reality is that it's kind of a chaotic, which is unfortunate. It's one of those things I would kind of wish they would figure out some way to tighten that up. Okay. And you go to the testing center, bring 2 forms of ID, and they give you a little locker. They'll take your phone and all that kind of stuff. They put it in a locker and they lock it up. But yeah, you can bring it in, and then when you go in, they'll hand you 2 little dry erase boards, I don't know, 12 inches by whatever. And and what I tell people to do is most likely you're going to memorize stuff. You're going to go through things that aren't right on your that aren't well known. You're going to go ahead and write your memorizations down, whatever they are, on the one sheet, and then on the other one you can do your work and your problems and all that. And you get your exam scores through the Illinois Board of Examiners. These are the people that give out the Cpa Exam credentials, the licensing. And To retake, oh, yeah, you have to apply, if you have to take the exam more, if you have to take a section more than once, you have to reapply for it, right? That's probably common sense, but, so anyway, and you have to pass all 4 parts within the 18-month window. 18-month time period. They're generally done in 3-month windows. And the windows are getting a little longer. I hear they say 60 days. I think they're up to 75 days or something like that. But anyway, you can take all 4 parts in that window. You can't take any part twice in that window. So you can take all 4 different sections, but you can't retake anything in that window. So basically you have 6 tries to, if you pass one, you have 6 tries to get the other 3 passed. Any questions on that?
How long does it take you to finish one part? Like hours or?
They're all about 4 hours. I think now they're all 4 hours. They used to be some were 3.5 and some were 4.5. But I think they're all 4 hours now. That was one of the changes that came about last year. But yeah, they're 4 hours each. And the nice thing is you can take them on different days, which is back in the day when I took it, you had to take them all. You had to take them 3 days in a row. There was 5 sections, and you had to take 1 on Wednesday, 2 on Thursday, 2 on Friday, and you know, these tests. I was in good shape back then. I mean, but I was like, hunched over oh man, it was just, physically, it was brutal just to be. But
right.
anyway, but yeah, so they're all about 4 hours. Now, as far as studying for the exam, there's reviews, and I would say you pretty much have to do a review. The school here is I think working on getting them together, but you pretty much have to take a review. They vary in price from about $1,500 up to $6,000. They may even be a little less than that on the low end. But the Becker review is the most known, and I think it's around $6,000. It's the I don't know, it's the biggest one. But again, the reviews, they also show you exactly how it looks on the exam, which is big, and how to do the test. That you go through and you have these different sections that you go through. They will give you the questions. They have these, like, they call them testlets. You go through and answer the questions, and you can always go back, and if you're in the same testlet, you can go back and change the answers, but you can't go from one testlet to the other. So when you close out of it, but all these things are kind of quirks that when you take the reviews, they from what I understand, what people have told me, are the reviews, the interface that they show on the reviews is virtually identical to what you're going to see on the CPA exam. So strongly encouraged to take a CPA review. If nothing else, get the software, the ones that mimic the, what's going to be given on the test. And you can actually go through and take practice ones. You can take practice CPA exams. When I used to teach it at Robert Morris University. We used to have them. The end of we had in quarters, but at the end of the quarter, we would go through and do 1 or 2 of whatever section we were going through, for instance, auditing. We'd go through them and do taking a 4-hour, review. We always did pretty well. We always passed them. Sometimes it was better than others, but we always passed them. We did them as a group anyways. But long story short, you get the software, you can actually go through and just keep working on it. And I think I told you this before, but maybe I didn't. The CPA exam, it's not an intelligence test, it's a diligence test. Those people that go through the solutions, once or twice, probably not going to pass it. Those people that go through it 4 times, 5 times, whatever, they're going to pass it. It's just the way it is. So it's not an intelligence test. And you guys you kind of know that. Some of the stuff, it's, you can do this, but not that, the kind of quirky stuff like that. And it just gets ingrained in you. And also, most of these questions that we just had were kind of, you get used to the kind of the tempo of the questions. You get used to seeing, especially answers that you can just throw out. When you first look at a CPA exam question, a lot of times they all look like good answers or whatever. But as you get used to doing them, and you get used to doing, 3-4 times, whatever time, many times you go through it, that you just get used to what a right answer looks like and what it doesn't, and that's a big part of it too. So it's not an intelligence test. You say, well, I'm not the strongest accounting student. You don't have to be. The guy I took the exam, we had another thing is good to have as a studying partner. The guy that I studied with, he was not the best student in the class. I mean, he was like a C student. He wasn't the best student, but we would study every single night. He would study every single night, and quite honestly, I mean, I probably passed because of him, because he would study every single night. So I would study every single night, but and we go through it, and he passed on the first time, and I did too. And it was just diligence. It was just doing it over and over and over and over and over again. So anyway, yeah, and the exam, you'll have people talk about how hard it is, but people pass it every day. It isn't that it's impossible. It just takes a lot of work. It takes a lot of diligence to do it. Any other questions on it? All right.
Nope.
Yeah, and if you have any questions or anything you want to talk about, just let me know. And, you can email me, and we can either email you back or set up a time or whatever. But I will send out the Chapter 3 exams. You guys should definitely get them by tomorrow. I'm going to see if I can get them out tonight. And everything will be due on March 1st. So March 1st. No, wait, that's not right. It's not March 1st. Oh, I said that wrong.
Tuesday?
Yeah, I'll keep. Since I said it, I'll keep it. March 1st. I should have said March 20 or February 25th, but it doesn't matter. I already said March 1st, so we'll go with March 1st. So I'll put that in there, and everything we do by March 1st, and I will send out those exams certainly by tomorrow.
Okay, great.
Okay. All right.
Thank you. Have a good night.
I'll see you guys next
Thanks,
week.
Professor. Have a good evening.